are underway to revamp the collapsed cocoa sector. Incentives will be provided to our hard-working farmers to increase cocoa production.
History doesn't always announce itself with a bang. Sometimes it arrives quietly, through a policy decision made not with weapons, but with the weight of centuries behind it. Ghana has just made one of those decisions. In a move that has sent shockwaves through the global chocolate industry, the Ghanaian government has banned the export of raw cocoa beans to Europe and North America. From now on, any cocoa leaving the country must be processed, at least partially, within Ghanaian borders. It's a move that rewrites the rules of a game that Ghana, and much of the African continent, has been forced to play for over a century. For decades, Ghana has produced hundreds of thousands of tons of cocoa every year, supplying the raw material for a $130 billion global chocolate industry. Yet until now, it captured only a tiny fraction of that wealth. The cocoa beans would depart the country in their raw form and return as shiny, packaged chocolate bars, retailing for many times their original value, while the country's farmers remained underpaid and overlooked. That era may now be coming to an end. The ban, which takes effect at the start of the 2025-26 cocoa season, is not just about economics. It's about sovereignty, dignity, and self-determination. The Ghanaian government has made it clear. Local farmers and workers should no longer labor to enrich foreign companies. If companies want Ghana's cocoa, they'll need to participate in Ghana's vision by investing in its processing capabilities and helping to build a sustainable, equitable chocolate industry on African soil. To support this transformation, Ghana has raised the producer price of cocoa to historic levels. It's a move meant to assure farmers that they will not be left behind in this shift. After all, nearly a quarter of the population is sustained by cocoa farming. Without their support, such a bold reform could collapse under its own weight. But this is more than just a Ghanaian story. The ban reflects a growing Pan-African movement toward economic self-reliance. Burkina Faso has halted raw cashew exports, Nigeria is focusing on domestic oil refining, and Botswana continues to assert control over diamond beneficiation. Ghana's cocoa ban is part of the same mindset. Africa must no longer export wealth in raw form only to repurchase it expensively as finished goods. For more than a century, this has been the pattern. Ghana's cocoa legacy dates back to the late 19th century, when a farmer named Teta Korshi introduced cocoa to the then Gold Coast. By the 1920s, the nation was the world's largest cocoa producer, fueling colonial economies with its beans. But under these colonial trade models, Ghana was kept in a subordinate position. Processing infrastructure was denied, local entrepreneurship stifled, and a global trade system emerged that sent raw African goods overseas while profits stayed in Europe and America. Even after independence in 1957, this pattern remained. Institutions like the IMF and World Bank encouraged structural adjustment programs that prioritized raw exports. Local cocoa processing facilities remain few and underfunded. The result, despite producing over two-thirds of the world's cocoa, Africa earns less than 6% of chocolate industry profits. Ghana's ban on raw cocoa exports is a direct challenge to that embedded economic model. It's a declaration that the global north can no longer benefit disproportionately from Africa's resources. It says the value should stay where the product comes from. Yet this bold move is not without its challenges. First, Ghana must expand its processing infrastructure. The country currently produces between 750,000 and 850,000 tons of cocoa annually. Converting even a portion of this into semi-finished or fully finished products requires significant investment in processing plants, reliable electricity, logistics, and skilled labor. Without enough capacity, beans could pile up in warehouses, risking massive economic loss. Second is the risk to farmers. Most Ghanaian cocoa farmers are smallholders, operating on less than 3 hectares. Their incomes depend on swift and predictable payments. If the cocoa cannot be bought and processed promptly due to bottlenecks, there is a risk farmers may turn to unofficial smuggling routes, especially to countries like Côte d'Ivoire. The government hopes that raising the cocoa producer price will offset this temptation, but long-term investments in rural infrastructure, fair pricing models, and farmer education programs will be crucial to ensure loyalty. Third, the infrastructure challenge is real. Cocoa processing is energy-intensive, and although Ghana's power grid has improved, outages are still frequent, especially in rural areas. Poor roads drive up transport costs, while outdated storage facilities threaten bean quality. If Ghana is to become a major processing hub, these logistical weak points must be resolved. Beyond its borders, Ghana is facing international pressure. Global chocolate companies, Nestlé, Hershey's, Mondelez, Lindt, have built their business on the uninterrupted flow of cheap raw cocoa. These giants are now having to rethink dynamics they once took for granted. To secure supply chains, they may be forced to relocate processing facilities to Ghana, partner with local businesses, or engage in fairer trade terms. Alternatively, they could use their global influence to try and pressure Ghana into backing down through trade barriers, lobbying, or even the manipulation of cocoa futures markets. And there's already been a shockwave in those markets. Following Ghana's announcement, cocoa prices surged as traders factored in the new risk to global supply. While this benefits Ghana in the short term, it also introduces volatility, a potential liability unless managed carefully. Nevertheless, many see opportunity in the disruption. Processing cocoa domestically could create thousands of jobs, strengthen rural economies, and generate new streams of tax revenue. It could spark a renaissance in African industry, one that transforms the continent from an exporter of raw materials into a genuine player in global manufacturing. If Ghana succeeds in this transition, it could set a powerful precedent. Côte d'Ivoire, the world's largest cocoa producer, is watching closely. Should it follow Ghana's lead, the two countries together, accounting for over 60% of global cocoa supply, would have the clout to reshape the entire industry. An African cocoa alliance could mirror OPEC's influence in oil, giving the continent unprecedented leverage over how chocolate is traded around the world. And it doesn't stop at cocoa. If African nations begin processing cobalt, lithium, copper, and other strategic resources within their borders, it could redraw the global economic map, shifting wealth flows that have remained unchanged for centuries. Of course, the transition won't be easy. As always, external powers may find ways to resist, through new loan conditions, trade limitations, or aid packages tied to reversing policies. But these tactics are riskier than ever. African governments and populations are increasingly vocal. Many are forging new alliances with emerging powers like China, India, and Russia, nations more open to investing in Africa's industrial aspirations on local terms. Ghana's move isn't just economic, it's deeply philosophical. For centuries, the continent has been told it can't build, can't compete, can't be equal in global trade. The ban on raw cocoa exports says otherwise. It is both defiance and affirmation. A country once cast as a source of raw materials is now declaring that it will no longer export poverty while others profit in return. This sets the stage for an entirely new chapter. Will future African generations look back on Ghana's cocoa ban as the moment the tide turned? As the first domino? The start of a broader continental awakening to the importance of owning not just your land, but the value that lies beneath it. That story is still being written. For now, Ghana has made its position clear. It is no longer enough to be free politically. True freedom must be economic, and it must be earned not through compliance with old systems, but through the creation of new ones. Ghana is not alone in this vision, but it has raised the first flag.